Today's company is Amazon. Most people know it as a global online marketplace, but behind the shopping platform is a much larger business, combining logistics, digital advertising, cloud computing, custom chips, and artificial intelligence infrastructure. In this analysis, we'll examine how Amazon makes money, where its profits really come from, and whether its massive investment in AI can support the company's next stage of growth. Amazon was founded by Jeff Bezos in 1994 and launched as an online bookstore 1 year later. The company introduced its third-party marketplace around the year 2000, launched Amazon Prime in 2005, and introduced AWS in 2006. Over time, Amazon developed from an online retailer into a diversified technology, logistics, and digital services platform. That transformation created an interconnected business ecosystem. Consumers purchase products and subscribe to Prime. Third-party sellers pay selling, fulfillment, and advertising fees. Businesses, developers, and governments purchase cloud services from AWS. Advertisers pay to reach customers across Amazon's platforms. Each group strengthens the others. More customers attract more sellers. Greater selection attracts more customers. And increased marketplace activity creates additional advertising demand. In the second quarter of 2026, Amazon generated approximately $200.6 billion in total revenue. Online stores remained the largest category at $70.4 billion. Third-party seller services generated $46.8 billion, while AWS contributed $42.2 billion. Advertising added $19.8 billion. Subscriptions generated $13.7 billion, and physical stores contributed another $5.8 billion. Retail remains Amazon's largest source of revenue, but the company is no longer dependent on only one business. The contrast between Amazon's operating segments is even more important. North America generated approximately $116.2 billion in sales and $9.1 billion in operating income. The international segment generated $42.2 billion in sales, but only $1.7 billion in operating income. AWS produced almost the same revenue as international, $42.2 billion, but generated $16.6 billion in operating income. That's nearly 10 times more profit from a similar level of revenue. Amazon's marketplace is another important part of its business model. Third-party seller services generated $46.8 billion during the quarter, an increase of 16% year over year. Independent sellers retain ownership of their inventory, while Amazon earns commissions, fixed fees, and fulfillment charges. This fee-based model allows Amazon to expand its selection and generate revenue without owning every product sold through the platform. Prime and Amazon's logistics network help keep that marketplace moving. Amazon operated more than 85 streamlined same-day fulfillment centers in the United States. During the first half of 2026, the company delivered more than 500 million same-day units. Its fulfillment network included more than 1 million robots, while the next generation of Proteus could move loads weighing up to 1,300 pounds. Amazon Now also expanded delivery of everyday essentials in 30 minutes or less. Then there's advertising, one of Amazon's fastest-growing businesses. Advertising revenue reached $19.8 billion in the second quarter, rising 26% year over year. Amazon benefits from strong purchase intent because customers often visit its platform already planning to buy something. According to the company, advertisers using its ads agent experienced 8% lower cost per impression and 6% lower cost per acquisition. Amazon does not separately disclose advertising's operating margin, but its rapid growth is becoming increasingly important. At the center of Amazon's profitability is AWS. Second quarter revenue reached $42.2 billion, up 37% year over year, its fastest growth in 18 quarters. Operating income was $16.6 billion, producing a margin of about 39.4%. AWS was running at an annualized revenue rate of roughly $169 billion and generated more than 60% of Amazon's total operating income. Artificial intelligence is becoming the next layer of Amazon's cloud strategy. Amazon Bedrock gives enterprise customers access to major foundation models through AWS. Amazon is also developing custom processors, including Trainium for AI workloads and Graviton for general computing. Management said Amazon's chips business exceeded a $25 billion annual revenue run rate. The goal is to compete across the AI infrastructure chain, from custom silicon and data centers to cloud software and model access. Together, these businesses produced a strong second quarter. Net sales reached $200.6 billion, increasing 20% year-over-year. Operating income rose approximately 43% to $27.5 billion. Amazon's calculated operating margin improved to about 13.7%, compared with 11.4% 1 year earlier. Reported net income reached an unusually high $62.6 billion. But that number requires important context. The jump in net income didn't come only from Amazon's normal operations. The quarter included approximately $53.4 billion of non-operating pre-tax income, primarily related to valuation adjustments on Amazon's investment in Anthropic. After taxes and other items, reported net income reached $62.6 billion. The distinction is important. The Anthropic adjustment affected non-operating income and reported net income. It did not increase Amazon's revenue or operating cash flow. That distinction also matters when examining cash generation. Over the trailing 12 months, Amazon produced $161.4 billion in operating cash flow. However, net purchases of property and equipment reached approximately $169 billion. As a result, trailing free cash flow was negative $7.6 billion. Management expected about $200 billion of capital expenditure in 2026, largely for AI infrastructure, data centers, power, networking, chips, and logistics. Future returns will depend on demand and how effectively that capacity is utilized. Amazon is also investing in future platforms. Amazon Leo had nearly 400 satellites in orbit and expected to begin initial satellite internet service during 2026. Delta planned to install Amazon Leo on 500 aircraft starting in 2028. Zoox received regulatory approval supporting its planned commercial robotaxi expansion. Meanwhile, Amazon continued using more than 1 million robots across its fulfillment network to improve speed, productivity, and employee safety. But these opportunities come with substantial risks. AWS faces intense competition from Microsoft Azure, Google Cloud, and other providers. AI infrastructure requires enormous capital spending, while technology and customer demand can change rapidly. Retail remains sensitive to consumer spending, inflation, labor costs, and lower margins. Amazon also faces supply chain constraints, antitrust scrutiny, and the risk that its new infrastructure may take longer than expected to generate sufficient returns. For the third quarter of 2026, management expected revenue between $197 and $202 billion, with operating income between $22.5 and $26.5 billion. At the July 31st close, Amazon traded at $271.58, with a market capitalization of approximately $2.95 trillion. A dated consensus of 59 analysts included 56 buy ratings, 3 hold ratings, and no sell ratings, with an average price target of approximately $322. That consensus is not a guaranteed outcome. Amazon has developed from an online retailer into a global technology and infrastructure company. Retail provides scale, advertising adds growth, and AWS produces most of the operating profit. The central question is whether long-term returns from AI and cloud infrastructure will justify today's pressure on free cash flow. This analysis is for educational and informational purposes only and does not constitute investment advice. Every company has a story. We tell the numbers.